The U.S. dollar is mixed in trading today, but the dollar versus yen is down minus 0.55%. The dollar is higher versus the euro, however, and a little change versus the sterling versus U.S. dollar. I'll go through those three major currency pairs in this video to kickstart your North American session. In the meantime, we will have US PPI data coming out at 8:30. The expectations are for 0.2% for each of the both the headline and the ex-food and energy components. The year-on-year numbers tick up a little bit, but still remain below the 3% level at 2.5% and 2.9% for the headline and the ex-food and energy. We get initial jobless claims with expectations of 228 versus 226. U.S. stocks are little changed. Yields are lower by about 2 basis points. Let's get into the technicals driving those three major currency pairs. Looking at the euro versus U.S. dollar from an hourly perspective, we saw the price extend above these highs here. Last week and this week's highs in trading yesterday, but the market then rotated back to the downside, tried to stay above those levels, could not do it, and then in the session today we started to rotate back to the downside on disappointment of the momentum to the upside. That move took the price down, however, toward the 61.8% retracement of the move down from the July high to the low price that we saw 1st of August. And also the 100-hour moving average, that's the blue line in this chart, both of them at the same level, 1.66615, and it's going to be the key barometer for traders on the downside and trading today and going forward, as long as the price remains above those two levels, those confluence levels. Granted, the 100-hour moving average is going to be moving higher and move above that level over time, but if it could stay above those two levels and the bias remains more to the upside, this is a corrected move and what is a bullish bias here. However, we do need to take this 1.17 level, 1.1703 level to increase the bullish bias. So, as mentioned, we did try to hold support against those levels through here. Could not do it, and then rotate to the downside. So getting back above it is a short-term bullish thing. So the market's waiting around for the PPI data. We'll see how that pans out and whether or not we see a dollar bullish move or a dollar bearish move. U.S. yields once again are moving lower. That sort of favors a lower dollar. Let's take a look at the dollar versus yen next. And as mentioned, this currency pair has moved to the downside in trading here today. One of the catalysts for it was the break of this confluence of support. The 38.2% retracement of the move down all the way from the January high. It goes all the way back to January high to the low price that we saw in April. Comes in at 147.13. We had the 200 bar moving average on the 4-hour chart right near that level. We had this trend line connecting recent lows right near that level, and all those levels were broken. And once we broke through that level, the price started to rotate back to the downside. So what was once support now becomes resistance at 147.13-ish type area. Keep that level in mind on the top side. On the downside, we did break below these lows right here, 146.55, but we're trading above or below it, as you can see, ahead of the data 8:30. On the downside, more dollar selling would have traders thinking toward the 100-day moving average. That's the next key target. We found support near it here and just above it here. So that level at 145.51 remains the target on further stretch to the downside on the bearish break in trading here today from that technical perspective. Finally, let's take a look at the sterling versus US dollar. Again, I'll focus on the hourly chart, and we keep on pounding against this ceiling area right through here. The ceiling area goes back, well, all the way to here. So we have this swing high right here, and then we rotated above it and use that level of support. Fell below it here, failed, support. Up and down across here, but then moving down here, and then using that level as resistance here. And then again in trading yesterday, a number of different times, of trading today, a number of different times. So this 135.75 to 135.91 level is a key resistance level on the top side. Break below that level, and we look toward the lows for the day, which also correspond with this kind of swing level right here. So there's a level that we need to get above, and we did, and we kind of failed a little bit, but then found that level of support. So this level at 135.61 would be a very short-term level to watch on the downside. 135.91 on the top side, break below that level, and the 61.8% retracement becomes the next key target. That's how this moved down from the July high to the August low. Get below that level, and things start to look toward the 100-hour moving average. On the top side, the door opens on the break of the 135.91, and you just look for next for the market to stay above that level and see how far we can go. Maybe up to this level, maybe up to these levels right through here, these highs right through here. those are obvious targets for the upside for the sterling versus US dollar. So there we have it.